Eevia is a small, innovative company based in Finland. We extract bioactive compounds from wild harvested material, plant material in mostly Finland and Sweden, that we then kind of manufacture and standardize to ingredients that are then supplied to the global industry. Most of the products we do are focused on having a health benefit, and the application would be dietary supplements. But as we are now developing the company, there are also other application areas which are relevant. We're clearly looking at medical food. There are cosmetic applications. We have a few cosmetic customers. And actually this week we got a customer in feed, in animal feed. So there are multiple application areas for these extracts, but our kind of strong suit is when we can talk about positive health effects. Basically, the turnaround answers many different challenges we have, but one very particular one is that you are required today to document and substantiate the claims you make, the health benefits you claim your products have. It's simply required by law. And we are moving to that by initiating clinical studies. We would like to show and demonstrate the effects our products have. And after a lot of consideration, we came to the conclusion that where we really can make a difference and where there is an opening and a space that we can address, it's gut health. It's a very large market, growing, and the current solutions, well, the dominant part of the current solutions are based on adding bacteria to your body, adding beneficial bacteria that then hopefully has an effect. Prebiotic, probiotic, postbiotics, they're all based on basically adding, we could say bugs in a bottle. Our offering is very different from that. Our proanthocyanidins have been shown in many different ways and on preclinical research that they have this type of effect that they self-regulate, or the gut microbiome can self-regulate and stabilize, and in that way prevent multiple syndromes like the leaky gut syndrome, etc. So that is basically a completely different approach than adding bacteria to your body. By the way, these proanthocyanidins also probably are aiding and helping those, so it can also be a supplement to a probiotic, which a lot of companies might recognize. So that's our basically differentiating factor. The new approach, really, and particularly the latest approach, which we are hoping to execute, is that we are simply separating three different type of business propositions or value propositions. So and a lot of people, we'd say investors, financiers, and etc., don't necessarily understand Eevia when you have them combined. So we're splitting out. We have a very interesting eye health product that has an extremely promising future that needs funding. And then we have experience and competence to how we can compete on what we call compendial products. But divesting these two basically business concepts, you can then streamline this value proposition, which is related to clinically documented health solutions. So the Eevia Health, the core of the business, is then going to be within, let's say, 1 year, really streamlined in terms of balance sheet, profit and loss, value proposition, what is your target customers, and so forth. And it's a very clear business idea with a very clear target market, very clear offering. And then we can see if these other two offerings can stand on their own feet. So it's clarifying and simplifying and streamlining each of the offerings to be able to compete on their own. The rationale is explained with two words: funding and focus. So Eevia Health today is a small company. We have three very different value propositions embedded in the current company. And we have been successful in bringing in shareholders' equity, but we have been very unsuccessful and unfortunately unable to bring in sufficient non-dilutive funding, R&D, loans, grants, commercial credits. We are simply not able to execute these three business ideas in the right way. So the rationale by the decision and the rationale behind divesting is to make the two most capital-intensive projects, make them more eligible for other type of funding. So, for instance, today Eevia is a public company, and by definition, we're then not eligible for investment grants from EU Rural Fund through the Finnish Economic Centre of Development. The two divested companies will be not public companies. They will be eligible for up to 40% investment grant from EU Rural Fund, as an example. The other aspect is focus. We are a very small organization. In fact, we're probably too small for each of those three concepts. So splitting those, streamlining those, and bringing resources to each of the three areas is, making, first, of course, enough resources, but the resources and the people and competence that are executing the plans have a very clear focus on each area, and addressing the right target groups, having the right go-to-market plan. It's creating a focus that would be key to success for each of the three businesses. And the value to investors and shareholders is, of course, that we will be more successful in creating value by building these businesses. All three of them have a very big upside, and I think you could fail on two of them and still create significant value. Shareholders basically get three horses in the race instead of one. Well, there's three maybe main purposes. One, it's obvious that the businesses here need a stronger marketing and sales organization. We need to build our sales organization, and we need to build our marketing. We haven't been able to do that, and improving our financial situation allows us to recruit and add to that capability. That's one fundamental thing. The other fundamental thing is that, of course, it's obvious that we are kind of overloaded with unsecured debt. With some of it is over maturity, so it will allow us. The rights issue will allow us to reduce the debt situation in some way, which again will enable us to do these divestments and normalize the liquidity and cash flow situation. And the third is that to be able to get this non-dilutive funding, let's say for a gut health study, we have just applied almost 570,000 euro to Business Finland for a clinical study on the gut health product. But there is an equity part, so some of the money will go to fund the equity part of the clinical study. Those are the three main purposes. So Eevia Health, the company, in 1 year will be a very different company. It will be a streamlined company. The balance sheet will look very different, much less, tangible assets, and basically a business focused on these health solutions, and having divested the capital-intensive parts of the business. And the roadmap there is basically filled with different funding events that we are, each of these three units will have different fundings that will be the roadmap to being able to execute the overall plan. But the end result is that Eevia will be an extremely focused product with proprietary products, focusing on multiple gut health indications, and selling, then having market partners that are launching and marketing these products in the global market. First of all, despite whatever we have been through, we are still in a market that is very vast, huge opportunities, growing, is a growing market. There are real problems out there, real health problems. If you can prove that you have solutions to these health problems, it creates enormous value for consumers, for society, and for shareholders. So just simply by the positioning in health is a very future-oriented business we have, businesses, you could say. That alone should make it attractive for an investor, that particularly those that have a little bit of longer-term view. Secondly, the way we're doing it now with this current divestment plan, we are enabling our shareholders and those that subscribe in the rights issue to be exposed to 3 different businesses that each one of them have dramatic growth potential. So you simply have, as I said earlier, 3 horses in the race, and you could see value growth in each 3 of those. At the same time, and that's the third reason, Eevia Health out of this, the main company simply have now, after the restructuring, streamlined. The business will be streamlined. It will be highly focused. It will be based on IPR, proprietary products, and it has then divested the capital intensive. So the shareholders will not be directly exposed unless they want to. They're not directly exposed to high capital requirements. So it also reduces this financial risks of the company and should make it more attractive for investors. And that is without losing their share of these options that will require capital.